Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Okay, I want to frame this for you because Stuart Kaiser is hugely qualified to do this with us. We're thrilled that he's with us this morning with Citigroup. A correction on the Dow 46, it was 48,000, whatever. A correction right now from the peak is Dow 43,000. A bear market gets us back to the April angst. It's Dow 39,000. Have we lost perspective over what a correction in a bear market are?
That's a good question. I mean, there's a lot of, as you mentioned, angst in the market. The S&P is only down three and change. Right. Dow's pulled back a little bit more. So, look, I think sentiment was so very bullish that even what is as a relatively modest pullback so far in the context of what's happened for the last couple of years, definitely has people stressed out. And to your point, I think the calendar has a lot to do with this as well, though. We're getting into year end. It's been a very difficult year. I think portfolio managers don't want to play hero ball here into year end. So you have to take it in the context of very positive sentiment, kind of a cautious investor base, and now a solid pullback, but I wouldn't really call it a drawdown at this point.
So, we've got a VIX. Tom Keene keeps us on our toes here as it relates to the VIX. 23.4. That feels a little angsty to me. But yet the market's only 3% off its high. This market's been ripping. My kids don't know any different.
Yeah, and I agree. I think the VIX, going into the weekend was probably at least a point higher than we would have expected, and this morning it probably will be as well. Again, I think that's some scar tissue and muscle memory for what happened last August and also what happened back in April. There's also a lot of retail flows, going into the vol space, so that may be impacting it. But honestly, I think a lot of this is it's calendar year timing and what we went through earlier in the year. Mm-hmm. Right. If you fought your way back from April, you're not going to let yourself mess it up going into year end. So I would expect investors to be a little jittery into the year end.
When does that historically end? Like if everybody goes, it's November 15th, the sun's setting ungodly early. It's like the Arctic out there in New York. Okay, fine. We get through this over days or weeks, and then does a fear of missing out bid come in?
I think it would typically resolve itself in a few days, I think. But then you have an event calendar in front of you that you still need to get through, right? So the market stabilizes a bit, and then, now I have Walmart, now I have Nvidia, now I have payrolls, now I have FOMC. Mm-hmm. So you're just in a situation here where I think the market would like to calm down, but we've just got a plethora of data coming in we have to respond to.
I know you're not on speaking terms with Andrew Hollenhorst, but basically he and his shop are running blind, right? They don't have any economic data. Is the market running blind because they don't have any economic data?
Yeah, I do think we're a little bit underinformed, relative to where we would be. The Fed the same. The
Lisa
Fed admitted
told me that yesterday.
Yeah, the Fed admitted they don't have a lot of data. That uncertainty is kind of played into their policy stance. So 100%, we're sort of grasping at straws a little bit. We'll get a little bit of data this week. It's going to take a week or two to catch up on the data, and inflation in particular is going to be very dated. So yes, there's definitely also some uncertainty out there because we just don't know. And then because of that, you don't know how to react to the data when it comes in. If I get a weak payrolls report, what does exactly that mean? So all of that, I think, has just created this sort of position of stress and angst on the market that we're just, that's why you're seeing that in the VIX, you're seeing that in risk pricing, and you're hearing that from investors when we talk to them.
And then we're going to get Nvidia after the close tomorrow, and arguably that's one of the most important stocks to report for corporate America and for the marketplace here. Do you sense that clients want to get ahead of that? Wait for it? What are you hearing in terms of positioning?
Honestly, it feels more risk than reward going into the Nvidia print. They just did a GTC down in DC, less than a month ago. Yep. You've had a tremendous amount of news flow out on the stock. From a price performance perspective, the bar is sort of low because it's basically flat-ish, since his last earnings report. But the expectations on earnings and spending are extremely high. Yeah. And look, I would never talk down the importance of Nvidia, but I think Walmart, frankly, is almost equally important this week. So yeah, look, people are bullish Nvidia. They're long Nvidia, and I do think there's a little more risk than there is reward from that stock this week.
Taking the optimism here, folks across the nation. Stuart Kaiser, Citigroup, head of U.S. equity trading with us this morning. Good morning on all of our audio affiliates and the visual on YouTube. Thank you so much for your attention. Subscribe at Bloomberg Podcasts out on YouTube. Paul, just to get the conversation moving forward, the looking forward view on Nvidia with their growth is 41 times earnings. Walmart, which is a little different growthiness, has a looking forward of 40 times earnings.
You point that out all the time. I know.
How do you grow your way into Walmart at a 40 multiple? I just don't get it.
I mean, people just want to own. I mean, they view Walmart as just America. It's the consumer. It's GDP. But that 40 times multiple is crazy. Seems like.
No, I agree. I think for Nvidia, you're paying for the forward growth outlook. For Walmart, you're almost paying for execution. Yep. Like these guys just have been masters at executing their supply chain, their inventory management. You now have, what were previously middle income spenders kind of trading down into Walmart stores. So that's why Walmart's so important this week, because they are so good at execution. They are such a good lens into the broad-based U.S. consumer that if they echo what we've heard from Home Depot, from Costco, from Chipotle, from O'Reilly Automotive, if they echo that, I don't think the market's going to take it well. Of all the new information we've gotten in the last month, to me, the weaker consumer earnings is probably the newest and the most concerning of all that information.
Yep. What's a straddle?
I mean, let's trading your PA early in the
morning. What's the real Stuart Kaiser world? We like SPX 21 November straddles. Translate.
So you basically buy the put and the call on the S&P 500, and you're just assuming the market's going to move more than that straddle is priced at. So coming into the week, that break even was 1.8%.
And you think it's going to either break out up or break out down? Do you care which way?
If you own the straddle, you don't. For me personally, I'd rather break out to the upside. But if you own the straddle, you don't. This
is like, how was Landman last night?
Awesome.
Fantastic. I feel like I'm in an episode of Billions with Stuart Kaiser.
You know what's interesting?
It's a straddle.
Landman, they filmed this when oil was like $75 a barrel.
No, I was just in Dallas. I'm all on the Landman.
You're all into the energy trade.
Okay, Lisa, did you watch Landman last night?
No, I don't have Paramount Plus.
Okay, well,
you get 2 months for 99 cents.
Okay, but what you do is your profession at Citigroup. Is there a derivatives appetite right now to participate in a market, or is everybody basically shut down to get to January 15th?
There's definitely derivatives appetite. Number one, we're seeing people hedge the Mag 7 stocks directly. So everybody knows what the investors own. They own Mag 7. That's getting hedged.
How do you hedge that?
Look, you're buying basically some variety of puts on the Mag 7 stocks. You put some bells and whistles on it maybe to make it cheaper, but big picture, you're owning probably 6-month puts across the Mag 7 stocks. To the upside, look, people are using call options to get a little bit of leverage into year end. Because to my point earlier, you don't want to mess this up. And an option is a risk-adjusted way to give you some exposure into the end of the year without kind of risking a major pullback. So we are seeing that.
This is brilliant, folks, and this is a window into the real Stuart Kaiser. Retail doesn't give a damn. They just want to know when to buy NVIDIA.
Yep.
It is basically the last 24 months, retail right, Stuart Kaiser wrong? I mean, is that really what we're talking about?
Definitely wisdom of the crowd. I mean, the crowd's definitely smarter than I am. What I would say on retail, though, is the last 2 to 3 weeks, they've pulled back significantly. Okay, their share of trading volumes was about 16% at the end of October. It's down close to 11. So we have seen retail, for one reason or the other, kind of pull back from the markets. And that is, A, that's been negative for the markets because you're not getting that buy flow. But B, it's also caught the attention of institutional investors who are wondering who that next buyer is. So look, retail has been right to own the market. And if you believe they're smarter than we are, then them pulling back should be a warning sign for you.
Let's take a poll. Lisa, Paul, do you believe retail's smarter than Citigroup?
Oh, totally. Yeah. Having worked at Citigroup,
I take a pass.
So talk to us about liquidity, Stuart. I come in with a big order into your desk. Can you guys get it done for me?
Yeah, liquidity is good. I mean, honestly, liquidity is good. Markets are functioning great. As I mentioned, you've had a little bit of pullback in retail activity, but volume of shares traded, value of shares traded has been above trend. For most of the past couple of weeks. So we're not having any trouble with that kind of execution issue at all, and I wouldn't expect to. I mean, the markets are deep, the markets are liquid, and people are. Again, it's been a tough year. You're not surprising anybody right now, right? You're not going to sneak up on somebody with bad news. Like everybody is more. It's like a deer in the headlights more than anything. It's not people who are going to get surprised right now.
Outside of the some of the big tech names, what are the sectors that you guys are leaning into these days? Maybe starting into 2026 outlooks and things. What are your analysts at Citi saying these days?
On our desk, we've been pretty bullish healthcare for the last kind of 4 weeks or so going into year end. You had earnings season, you had some nice some catalysts from obesity week and stuff like that. So Vishal Vivek and our team has been pushing. But I know it is kind of a funny name for a week, isn't it? So we've been pushing some upside in healthcare. You've also had some M&A announcement in the biotech space. So that does seem like a little bit of a catch-up trade. There are a lot of positions that look quote unquote a little bit offsides right now. But again, to me, that's an early 2026 trade because I can't walk into a portfolio manager's office and say, hey, why don't you take all this risk in November? It just makes no sense for them. So there's a lot of opportunity there, but I think people are going to be slow to adopt that until we get around the turn of the calendar.
Are people, again, we had such a bad April, such a bad beginning of the year, but boy, we've more than made up for that. Are there PMs out there that are trying to chase performance for these last few weeks of the year? Do you see orders coming to your desk saying, boy, that's a weird trade,
I think that the performance chasing is going to be a little bit limited to what people already own, honestly. There's definitely some performance chasing coming off the bottom. I think foreign and European investors in particular were chasing the market higher over the summer because they were just not invested in AI. But again, I think the chase you're going to see into year end is going to be in winners, tech, large cap growth, right down the middle.
How does 401k investment play into this? There's like a wall of money hit Citigroup April 7th of next year.
Yeah, if you look at like seasonal patterns, the week of tax day is usually one of the biggest weeks of the year. The week that straddles tax day, and bonus season. Obviously, some money does hit the 401ks at that time. So there is some seasonality there. But retail is different now, right? Retail is not just the 401k investor. Retail is now people in their basement drinking Mountain Dew, and it's also registered investment advisors who have aggregated up $1 billion in assets and who actually behave more like institutions.
Stuart, thank you so much. Brilliant, really, really important start to the morning. Stuart Kaiser with us.
Citigroup stock up 40% this year, Tom.
Yeah, it's because of Kaiser. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
This is a timely conversation at year end here with all that's going on. Maybe to look at 60,000 Feet as her classic book on Vladimir Putin. Angela Stent joins us now, Senior Fellow, the American Enterprise Institute. Angela, Mr. Trump is older and there's lots of talk about his health, about the future and that. Don't want to get into that this morning. Mr. Putin is a little bit younger. How do you perceive the transfer of power after Putin? Have you thought that through?
We've been speculating about this for a long time. It's very hard to say. He's been very careful not to be a lame duck, not to name a successor. Every time a younger person's name comes up and people say, wow, this person could maybe succeed Putin, then their kind of name disappears. They don't disappear. So we don't know whether there's a succession plan. And if there isn't a plan, then it could get quite nasty.
Casey Michael over at Politico. Paul, 5 scenarios for Russia after Putin's next term.
Well, I don't know. Yeah,
maybe there's 6 or 7.
Yeah, exactly. Dr. Stent, where do you believe President Trump is in his engagement with what's happening in Ukraine here? He's initially, it looked like he was pretty positive that he would be able to affect some change here and get some peace here, but I'm not sure about it right now. Where do you think he is?
So I think he's increasingly frustrated by the fact that Putin, in fact, is not interested in serious negotiations. Every time they have a conversation, as President Trump has said, it's a great conversation. And then the Russians bomb more civilian targets in Ukraine. They're bombing their energy infrastructure. They're trying to make sure Ukrainians don't have any heat or light in the upcoming winter. So I think he's realized that Putin is not willing to really engage with him. I think Secretary Rubio's realized that too, and that's why he apparently dissuaded the president from trying to meet Putin in Budapest. So really, everything's at a standstill now. The war is grinding on, but we're no nearer a peace settlement than we were in January of this year.
Well, the synthesis at the American Enterprise Institute then, just as a general statement, Dr. Stent, is American money sent to Ukraine? Is that money well spent right now?
Well, at the moment, there isn't much American money going to Ukraine, right? There is no appropriation for next year. The money that was sent was still a holdover from the Biden administration. So it's the Europeans who are buying American weapons now and then sending them to Ukraine. Was it well spent? Well, it's enabled the Ukrainians to push back so far, but they're going to need a lot more going into next year to continue to push back the Russians.
Sanctions. We've been hearing about sanctions for years. Is there any effectiveness that we can measure on sanctions? Is there any red line that maybe the Western nations could cross to really impose pain upon Putin and the economy?
So I think these new sanctions that the U.S. announced a couple of weeks ago on the two major oil companies in Russia, Rosneft and Lukoil, if they are properly enforced, if we go after the shadow fleet that's transporting a lot of the Russian oil to third countries and then re-exporting it to India and to China, places like that, if those are properly enforced, then I think it would have an impact. So far, none of the sanctions have been really rigorously enforced. So that's really what we have to watch for. Yeah.
Here at year end, Angela Stent, all of us at Team Surveillance, all we can ask is for the next literary effort by Angela Stent. Your book was my book of the year a few years ago with all the horror of Ukraine. And we're just looking for a brave new effort from you as you can. Angela Stent, a wonderful Thanksgiving to you and Mr. Stent as well. She's at the American Enterprise Institute. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Great conversations today. Let's keep that going. Randy Schwimmer with us, Vice Chair, Chief Investment at Churchill Asset. Your world of alternatives, private equity, private credit. Do you need retail investment? Aren't institutions just throwing gobs of money at people like you?
Well, first of all, again, great to be on. I was in the Middle East last time. I think we called in and a friend of mine said, and you got your listenership is amazing. He said, I heard you guys on Bloomberg. It was great. And by the way, I was in the shower and I was listening to you. So you got people all over listening to this.
People listen to us in the shower?
In the shower. So just keep that in mind.
Oh, that's too much information.
Usually it's a
sigh.
I was in the bathroom and I heard you guys talking. That's usually what I get.
Yeah, there you go. So we were just at our annual investor meeting. We had 200 investors of all stripes and sizes, institutional wealth. And what's interesting is now institutional investors have kind of cleared the way for the wealth sector, because what they've done is a lot of the hard, heavy lifting. What's this asset class all about? How does it work? And with that information out there now, retail investors are saying, this looks interesting. How do I get involved? Right. And they have to understand, because it's really an education, like what's the difference between private credit and public credit? What's the difference between private equity and public equity? So our job, the alpha in private capital right now, as one of my friends says, is education, right? Performance is beta. Make sure you don't, screw that up. But really make sure that you train people as to what are the holes that we could fall into. Is private credit a bubble right now? Is timing an issue for private credit? Should I be jumping in with everybody else seemingly going into the asset class?
How about some of the concerns we've had in the marketplace about some of these private credit providers, Tricolor and some others, I'm sure that's popped up in your conversations. How do you kind of frame the risk out there in some of the private credit business?
So, both with the Lead Left, which you guys sponsor, thank you very much, and our podcast, I think everybody that we talk to understands that Tricolor and First Brands were really bank deals. They weren't private credit deals.
Okay. That's an important stop
real
there.
distinction.
This is a huge distinction.
Yeah, distinction. So I've written about it. The bank loan market is really a moving market, as my CEO likes to say, and we're a storage market. And so if you are, think about the saying, nobody washes a rental car, right? And I've enhanced that. It's no one details a rental car. If you're just passing that loan along to your investors, you got to make sure if you're syndicating that it's good, because otherwise they're not going to come back to you, right? But if you're holding it, it's a whole different ballgame. You're going to pay attention to the little dings on that car. You're going to make sure that you can, and you want to detail it because it's your car.
So what are your clients in the private equity side? What are they saying about their deal pipeline? Are they going to need access to your credit pools?
Yeah. So good news on private equity right now. And we had some panelists at our investor meeting who were top private equity investors. And they're like, you know what? M&A is getting better. Why is that? Because rates are coming down. So financing is cheaper. So it's more available, easier to, get deals done. And for sectors that have grown through all this turmoil and headline risk and tariffs and rates and all the rest of it, those deals are getting better multiples than they were getting in 2019 because they've been through so much that the investors say, you know what, this is weatherproof.
Randy Schwimmer with his vice chair, Churchill Asset Management. So I want to go to like a general partner and limited partner structure.
Yeah.
Somebody's got an IRA. You're talking to Fidelity about it, or, name the Schwab, whatever. Mm-hmm. You're talking about bringing these investments into people's retirement plans in whatever form and way. How do you do a choice set of X number of bundled private credit opportunities between retail and institutional? Come on. Yeah, institutional is going to get the best stuff.
So the way we work is it's basically everybody gets the same cooking. We allocate across all of our funds pro rata. So everybody gets everything. Our biggest investor is, as I mentioned before, TIAA, which is a AAA $1 trillion nonprofit investor.
They're going to get the same.
They're getting the same treatment.
As Lisa Mateo's
Lisa is getting the same treatment.
TIX
Lisa will get the same treatment as TIAA. How's that, Lisa? How do you feel about that?
All right.
I know that
she's AAA too.
You're going to give her 14% yield, net clean, right?
We'll give her everything she deserves.
What's the capital raising environment like out there these days, both on the credit side and the equity side?
So it's all about balance, right? Because one of the things that we've talked about here is if you have too much money coming in, it's really hard to deploy thoughtfully. We have found, and this has been part of our whole thing, is that the amount of money that we're raising is right about the amount of money that we're deploying, which is nice because we're balanced. We're not in a rush to put money out. We do it thoughtfully. We turn down 95% of all the deals that come in because we know we're going to own this thing forever. And so what's happening is the fundraising environment has actually improved for the managers who are showing better returns and better track records, particularly in this environment now where portfolios are showing some cracks for more of the adventurous lenders
so
out there.
So for TIAA-CREF in the Lisa Mateo retirement plan, you're going to have a piece of the action. Yeah. Describe your incentive and interest to TIAA-CREF and El Mateo trustees for. Yeah.
So if you have private credit, you're getting kind of a right now 10%, 9 to 10% unlevered yield. And then we have a spectrum. We have junior capital where you're getting kind of mid-teens. You have private equity where you're getting kind of high teens, low 20s. And so this diversity of strategies that we're offering both institutional and wealth clients is very attractive in this environment because people are looking for both durability of income streams, less volatility, like don't hurt my downside, and enough upside to justify going into an illiquid asset class. So bonds, high yield bonds is like 7%. You got to do better than that. Broadly syndicated loans, kind of 5 to 6%. You got to do better than that and keep me safe.
Paul, all my radar's up. I'm sorry. Randy's looking at me. He's got that evil eye.
This guy calms my.
That's not evil. That's a loving eye.
My concerns. How are the banks? What's the competitive marketplace out there with you and the leveraged loan desks at the banks up.
We don't compete with them because again, they're not doing any new LBOs. So only about 5% of new LBO activity is being done by the banks right now. Isn't that amazing?
That is crazy.
It's crazy. It's mostly refinancings and repricing.
So you guys have just taken over that market.
Yeah, I mean, look, the reason is because
on that stuff.
Our deals. When we send a term sheet out to private equity sponsors, it's like, here's the deal. We can hold the whole thing. And so we've taken the risk out, whereas the banks, are just selling so they could change the price on you at the last minute.
Oh,
man,
did he say that?
Yeah.
I'm kidding. Randy,
amazing.
thank you for the
Good
brief.
stuff.
Randy Schwimmer, not from Dubai, from New York City today, Vice Chair, Churchill Asset Management. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
With the newspapers, Lisa Mateo.
Okay, I'll start here. Okay, so remember last year when all those people, the Oasis fans, they complained about the cost of buying tickets. They went up like over $4,000 a piece. So the Financial Times is saying UK ministers, they want to ban the resale of tickets for live events above the original cost. So the new legislation, it's being drawn up by the Labour government. It's also going to cap service fees charged by resale platforms. So the changes, of course, it's going to affect people like StubHub. The StubHub shares, they were down about 14%. Now they're off about 1%. But StubHub International, which is kind of a separate business of StubHub, they say that limiting the price increases risks creating this illegal black market for tickets. So they're saying if you do that, it's going to be worse.
This is insane. It's just
the market is what the market is.
They want to go see Bruce, right?
Exactly. The market is what the market is. And you talk to Live Nation people, they've been dealing with this for decades at Ticketmaster. But
do we all agree it's just simply demand? Ariana Grande gets out there. It's just, they set the tickets lower. I get it. Mm-hmm. But is anybody talking about illegality on the part of
No, I think the big issue is you
seller?
have to try to figure out how to identify who's buying your tickets on the primary market. If it's a reseller, you got to get that person out somehow. And I don't know how you do that. And they've been trying to do that since the beginning of time.
Yeah, I'm very careful. I'm a loyal StubHub. I'm very careful about it. I know you had a terrible experience. Next.
The smear.
Tickets. I have a Cheetos and tan.
Exactly.
He's getting flashbacks. Okay, this one is about pickup lines, okay? I don't know if you guys have your favorite pickup line, but okay, this is Bill Ackman, billionaire CEO, Pershing Square Holdings.
You're doing this?
Yes, he's offering advice to young men who have a tough time approaching women in public, okay? So
why are you looking at me?
He said, he posted about it on X. He said, what he used to do is he used to go up to a woman and say, "May I meet you?" That was it.
All right.
Hook, line, and sinker. It worked for him, okay? But
I have never...
His kids are probably like, Dad, I can't believe you're out on social media doing
Can you
this.
believe it?
Just run your hedge fund, please.
It's just, I've never met a woman in a bar. It's just unbelievable.
It went viral, though. People were talking about it.
They went mental.
Yes, they went crazy over 4,200 comments. And he was answering back some of them too, going back and forth. And remember Whitney Tilson, he ran for mayor of New York City, former hedge fund. He's known Ackman since they were back at Harvard, right? And he told Business Insider that that line worked. He saw it work.
There you
It
go.
worked for him. I mean, now, he's has kids and, all that kind of thing.
Plus, he's got billions, so I think he has no problem.
But back then, he didn't.
Yes, you're right. Good point.
Thank God I have an HR chip in my left shoulder. I so bad want to ask Lisa Mateo her worst pickup line ever. There it is. It's Ken Cooper zapping me right now.
It was probably my husband, actually.
Moving on.
Here we go. Okay. So the Wall Street Journal has a look into how the world's most watched YouTube video has not made its creator rich, okay? What is this video? It is the children's tune from South Korean company Pinkfong. Yes! You're welcome. That's going to be stuck in your head all morning long. Baby Shark played on average more than 4.7 million times a day since it was uploaded in 2016. 16.4 billion views. But Ping Fong actually had its first trading day in Seoul on Tuesday, rose more than 9% to about $28 a share, moved the company's market value to equal about $400 million. But the Wall Street Journal, what they do is how they have this look into how all that viral power hasn't really translated to this big fortune for the company because restrictions are placed on online children's content. So it kind of caps the ability to monetize on all that attention.
Right.
But I mean, they're still doing pretty good.
All right.
Baby Shark
dance. All right.
Blackpink new album, January. It's like waiting for Landman, except it's Blackpink's next album. Can't wait. The newspapers with Lisa Mateo.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.